When you think of what's important to families, housing is really at the top of the list.
There's a need to shelter in place, to work from home, to create home-based income and businesses.
And I think this book is a very good overview of the stakes of housing finance and what needs to be done.
All the authors who contributed to this book are the leading experts in the field.
This book allows you to see the full picture, the entire ecosystem. If you're really looking to start or expand your housing program, this book is really for you.
Hi, I'm Patrick.
And I'm Daniel.
And we are the editors of Taking Shelter, Housing Finance for the World's Poor. Stay tuned for some really interesting interviews that we pre-recorded. And while you're watching, please submit your questions in the comment box.
And we'll be back to respond to them at the end. See you on the other side.
See you soon. Hello, and welcome to this session, which is a fireside chat about the new book, Taking Shelter, Housing Finance for the World's Poor. As you probably know, my name is Patrick McAllister, and I am one of the editors of the book. And I'm here with two of the authors of the book, of chapters of the book. And we're going to have a little discussion about what they wrote about and how it was, using their experience and encapsulating it in these chapters. So I'm here with Marja Hoek-Smit, who is the founder and director of the International Housing Finance Program at the University of Pennsylvania's Wharton School. She's a frequent advisor to governments and private and nonprofit sector clients in emerging markets and developing countries in the field of housing and housing finance. She's also the executive director of HOFINET, the Housing Finance Information Network, which is a global web portal that consolidates international housing finance information and statistical data for public use. So if you haven't been to HOFINET yet, you definitely want to go check it out. And then I'm also here with Stuart Rutherford, who is a qualified architect and an honorary senior fellow at the University of Manchester's Global Development Institute. He's written extensively about financial services for poor people, including in The Poor and Their Money, and as a contributor to Portfolios of the Poor. He's currently the director of the Harishipara Daily Financial Diaries project in Bangladesh, and he's joining us from Japan. Marja is, of course, in Philadelphia, where we're anxiously awaiting the results of voting. By the time this airs, we will know. And I am in Vermont in the United States, where I'm trying to escape it all. So we're going to have just a little bit of a chat, and I hope that you enjoy it. So Marja, first of all, I just wanted to ask you, since you wrote the first chapter of the book that lays out the state of housing finance for the world's poor today, what do you see as progress that's been made in the last decade around housing finance for the world's poor? And what are the key challenges in the years ahead?
Thank you, Patrick, for the introduction, and I'm glad to be here. What we have seen over the last few decades is that actually in housing finance, not much has changed in advanced economies. Many people have access to mortgages, the same percentage as we had before. But we have seen in developing countries, emerging markets, that indeed access to finance in general has increased dramatically, but not that much to mortgages. It is much more in the area of consumer finance, which is a little bit of a worry, given that we have such an incredible requirement and need for new housing and improvement of existing housing. Having said that, we have seen, even though the numbers are very small, an improvement in microfinance. But more than that, we have seen an enormous growth in awareness that in developing countries, they have to move, and we as both the private and the public sector, that there has to be a movement to incorporate more people into the mortgage system. Mortgages are, of course, because they're secured by a lien on the property, by far the cheapest form of credit. And if people don't have access to mortgages, you cannot really stimulate at scale into the formal housing market. And we have seen that governments and the private sector begin to understand that it is in everyone's interest to begin to move down market with the mortgage market. And these efforts begin to really pay off. They are not yet discernible very much in the data, but we see it in practice. So we see a lot more attention paid to how to reach low income people, and particularly people with informal incomes. How can we reach out to them, those that can, because they're credit worthy, access the mortgage market? We see the same thing beginning to happen, very much so, I would say, in microfinance. We see that many microfinance institutions that have a housing portfolio are beginning to understand how to scale up. They begin to expand their access to funding. So we see a lot of positive movement in the scaling up of the microfinance for housing sector, which is a must if we want to really begin to create, I call it a seamless system of access to housing finance, whether it be microfinance, micro mortgages, or mortgages. So not yet so clear in data, but very much on the ground progress in this field.
Sorry about that. I'm just curious because I know that you teach a lot of mortgage bankers from emerging market countries. Do you see them wanting to go down market and serve lower income populations and maybe more people, but with lower loan amounts?
Well, there is this tension. The credit risk and the cost of moving down market to smaller loans and less credit-worthy or more risky customers is a challenge. But once you have a sector and a group of lenders, like in India, that understands that this is actually an enormous market, much larger than the top of the income distribution, and that if you understand how to crack that nut, how to do mortgage lending actually successfully, and without too much risk, they begin to apply all the modern facilities that we have through the internet, Google Earth. We have all kinds of packages that make underwriting of customers and of the property, you need both, a lot better and a lot easier for them. So the innovative smaller lenders, often not the big banks, but housing finance companies, SACCOs as they are called in Kenya, the cooperatives, they are really expanding their portfolio down market very rapidly. And like in normal markets, when the more conventional, traditional banks see that there is actually money to be made in that broad lower middle income market, they will join. Also, I must add that there are more tools that are available in most markets, both decrease the credit risk, tools like mortgage insurance, and also that provide liquidity to that market. Because one of the constraints is, of course, always that a mortgage is a long-term instrument, and you mostly fund it by short-term deposits. So there are many more options now to access capital market money, and that will be very important for the banking system to come in.
And I just want to bring in Stuart here into this conversation. One of the great pleasures of editing this book is that we had people from all different perspectives contributing. And Stuart, your contributions were mostly around the individuals who are participating in the Harishipara diaries. And so I just wonder how you interpret what Marja just said about the global state of housing finance for the world's poor.
Yes. Hello, Patrick. Hello, Marja. Yes, well, I thoroughly endorse everything I heard Marja say there. I've been watching recently in India the growth of the microfinance attempt to bring mini mortgages, partial mortgages, more helping people to not perhaps build a complete home, but to add to a home, to add maybe just a latrine to their home through loans secured against the building which is already there, that they've already succeeded in putting up. I think Marja is right to stress the important role of the microfinance movement here, because of course that's where the huge reservoir of experience of working with poor people is. Microfinance institutions are much, much closer to poor people than banks are. And particularly in those markets like Bangladesh, where I'm doing my work at the moment, where microfinance is very old, that's a very important consideration. In the book, in our chapter, we have one story that I'll just very briefly tell about an early effort by a microfinance organization to bring money into housing. This is the famous Grameen Bank. One of our diarists, one of the people who volunteer to give daily report on all the money that comes in and out of their pocket, has been doing so for 5 years now, is a woman called Samita. Back in the 1980s, she was one of the early joiners of Grameen Bank, and she became eligible for Grameen Bank's early housing scheme. Now, she was lucky. She was from a poor family, and her father died when she was still quite young. But her brothers, somewhat unusually in the Bangladesh context, decided that they would allow her to have a bit of the inheritance from the father's property. So she got, when her father died, a very small slice of the family homestead registered in her name. And that allowed her to take this Grameen Bank loan, because Grameen Bank had brought in this rule that they would only lend to households for housing if the land upon which it stood was registered in the name of the woman. Mm-hmm. So that was a very good example of a very good social intention. It didn't always work out as well as it could, because a lot of men said, well, we're not prepared to do that. Just for the sake of a Grameen Bank housing loan, I am not prepared to transfer the deeds into the name of my wife or daughter or mother. But anyway, Samita did. She got that loan, and that really was a huge springboard for her. It enabled her to improve her little mud hut into quite a substantial building. And she went on being a member of the Grameen Bank. She's a great saver, and savings is a very important part of the housing finance story. And with those savings, she sent sons overseas to work in Singapore. They made a lot of money. So she has now, just in the last year, torn down that Grameen Bank house and is building herself a very grand new house of brick and cement.
After how many years? How many years did they live in that Grameen Bank funded house?
About more than 20.
More than 20 years, which is
yeah.
which is a pretty good amortization for a relatively simple house.
Yes, the Grameen Bank loan that she took had a 4-year term, but she actually managed to, and it was repaid in weekly installments, but she actually managed to pay it off within 2 years. So she did very well.
No, yeah. You have such a great perspective because you see the daily, very, very granular bits of financial flows in and out of these, low-income households. And I must say that your stories are very evocative because they really are the very poorest people that you could come across. And but I wonder, how has that perspective, or that seeing how those households survive, how the financial flows in and out of those households allow them to survive, how has that added to your understanding of how low-income households deal with housing, which is probably not a very big part of most people's financial flows, but very important?
Well, I think it's confirmed many of my earlier observations, but has added something to them. I think anybody, when they first venture into this field, when they first start to look at poor people and housing, they get a shock. They suddenly see that it's a much more complicated affair than they might have assumed. This happened to me as long ago as 1974. I was in Managua after the big earthquake as a very young researcher. And my job was to find out what had happened to poor people's housing in the earthquake. And to my surprise, what I found was that for many of them, not for all, but for many of them, it was an opportunity, because their own flimsy houses fell down. The next morning, they put them up again. And then they went into downtown Managua and they salvaged all the materials from the heavyweight buildings that had fallen down in the earthquake, carried them back in wheelbarrows to their housing areas and improved their housing. So that was something totally unexpected to me, a real shock. It made me understand that, it made me understand the role of circumstance in this. It made me understand things such as how the poor in their housing have agency. They're very capable of grabbing opportunities when they come. And it taught me something else as well, because at the same time, the international aid community was pouring money into Nicaragua. And for example, they built some very nice timber houses for poor people at very, very low rents, and nobody went there. Nobody went there because they were in the wrong place. So it taught me a lot about location as well. And so what happened, I mean, that showed me how difficult it is as outsiders to intervene in this very personal field of housing. Because what happened was that these nice timber houses, which were meant for the poor, never went to them. But the money that was spent on buying the land on which those houses were built made a lot of rich people even richer, because they were able to trade up their land and make a lot of money out of it. So that immediately showed me that there are dangers here. And it taught me this lesson, that unless you really understand the situation that the poor people themselves are in, their needs, where they want to be, what they want to make their house of, their social situation, their social networks, their own private finances, you're likely to make some really foolish mistakes. And I think that, coming to your point, the daily diaries that we're doing at the moment is showing this. So in the book, we have several stories about people whose fortunes in housing is very much tied to their family networks. We have one story in the book about somebody called Panna. She looks like a very successful case. Her husband got a job overseas in Singapore, started sending a lot of money home, but their only opportunity for improving their housing was within a family network, within an undivided household consisting of 4 brothers, of which her husband was one, and their wives, sharing an old inherited homestead. And the management of that homestead was in the hands of an uneducated rickshaw driver who really couldn't manage it. So things went badly awry. So although there were 2 brothers overseas in Singapore sending money home, they never really got the housing going properly. And it was only when things came to a crisis and they decided to separate the 4 families into 4 separate financial pots, as it were, that Panna was able to take the money she was getting from overseas and direct it immediately into building her share of the old family plot.
So I love that idea that, housing is personal. Of course, it's personal because it's your house, it's your home, it's where you spend a lot of your time. And I'm also really, thank you for sharing your own personal story about how you got into this. It made me actually wonder, and I'm going to put Marja on the spot a little bit here and go a little bit off track, but just ask Marja, how did you get into this field of housing?
It's fascinating to hear the date. So it dates both Stuart and I. I started my first job in 1974 as well, in Kenya. And I have done, I started there in slum upgrading and writing the upgrading policy of the government. As we all now know, that was in 74. Upgrading of slum areas and informal areas has not taken hold in Kenya very much. And so after 4 years in Kenya, I understood that the country was not ready, basically, to really take the problems of the low-income population's housing situation seriously. Now that is changing, actually, I think. But in 74, that was still, no, slums were, there was Matara Valley, the big one, but they were not all over the map. And we had plans at that time to address the affordable housing crisis with what they then had were sites and services schemes. So you received a plot and a small core house. You build houses in the back of that plot for rent. That rent would then pay for your mortgage loan. These loans were not mortgages. They were made by the local governments, but they were very low in risk because there was a money stream behind them by way of rental income. That model is now coming back with a vengeance in countries like South Africa, for instance, where once you have a plot, you can extend that plot with rental units that then will pay for your loan. But there is a long time between that model actually being seen between 74 and 78 as a reasonable model to address low-income housing provision, both for owners and for renters. And now, 40 years. So that is how I started, and I've never left the field. Yeah.
Well, let me ask you, because you just mentioned government, and I know that you've recently been studying the connection between the pandemic and housing. And I believe that you you're one of the authors of a new report called Cornerstone of Recovery: How Housing Can Help Emerging Market Economies Rebound from COVID-19, which is, of course, incredibly topical. So I was wondering if you can just talk a little bit about how you see the government's ability to channel financing through housing in some way as a response to COVID-19.
Yeah, thank you for that question. It's an interesting one. Housing is often very much underestimated as part of the economy. Housing, on average, contributes in emerging markets. The study that we have done has documented that for a small sample of countries, and we want to expand that. But housing is contributing on average 16% to the GDP of a country, very much in line with manufacturing and other major sectors. And it is doing that through both investment, the traditional building of houses, but also through the stream of money that housing generates by way of rents. Or if you are an owner, by way of imputed rent, we call it, the rent that you should pay if you were renting that same house. So consumption and construction, production of housing contributes on average a large part of the economy. So the housing sector, therefore, if you want to do an economic stimulus, and many countries want to do an economic stimulus at the moment because of the enormous downturn. I mean, the figures are staggering. The drop in GDP in most countries and GDP projections. So the housing sector is an excellent sector to do that because it is so important. And it generates, moreover, a lot of employment, not just in the construction of houses, but also when you create housing, you need stoves, you need a refrigerator, whatever. So it has additional stimulus capacity. But in the COVID crisis, it becomes critical. A house is indeed the core of each household, where you educate your kids, where you have a production going, where the location of that house is critical relative to your employment, etc., etc. So for a dual crisis that we now have, COVID and an economic crisis, the investment in the housing sector should be a very high priority. What we find out is that in most countries, we have enormously expensive stimulus packages that cost poor governments a hell of a lot of money, but they are not focused on the sector that should be an absolute no-brainer, basically, the housing sector. And if countries do stimulus through the housing sector, very often we see that that stimulus is oriented towards that part of the housing market that has plenty access to mortgages, has big developers standing in line to provide that housing. That is the top 20% of the market. That is not what economic stimulus really should do. An economic stimulus should broaden the market, should go there where it has the most impact. And that is that broad middle and lower income market. In order to do that, you have to do more work, that is for sure. It's much more complex. If you don't have easy access to mortgage markets, and that is the sector that you want to target, at the frontier of the mortgage market, you have to put in place a few more institutions. You have to be much more creative to help that segment of the market. And if you want to go lower, you have to think of upgrading, home improvement schemes. And that is not done so readily. The other concern, of course, with the housing sector is that it requires land. And in order to quickly do an expansion of the housing market, the intuition is often to go to cheap land. And as Stuart just mentioned, the drama of that, cheap land in terrible locations where you can build cheaply. That is a catastrophe. So if you don't want to fall into those pitfalls, you have to use existing land resources that the public sector and particularly local governments already have access to, and that is serviced, so that you can mobilize the housing market quickly and in the right location. So I'm working actually with several governments on fine-tuning their stimulus packages and making them more useful for the segment of the market that is at the moment so badly hurt by the COVID crisis.
I'd love to hear more about that. Can you just name one country that you think is doing a good job at the moment?
Actually, Mexico is doing a fairly good job of doing home improvement at scale. Also, Colombia is trying to do the right thing with home improvements more than new construction. Now, that is a lot easier in Latin America, where urbanization rates are not so high. And the upgrading, the improvement of existing stock takes priority. But when you look at countries that are still urbanizing, you also need to think of new stock.
So
Pakistan is at the moment, sorry.
Sorry, I don't mean to talk over you, but we only have about a minute left, and I just want to bring Stuart in because you will have a unique perspective on what Marja was just saying in terms of how to respond to the COVID-19 crisis from a housing angle. So I'd love to hear your perspective on that, Stuart.
Yes, well, there isn't a great deal of government stimulus of the housing market going on. In the particular area where we're doing our diaries, about 15% of our diarists are on the receiving end of overseas remittances. And a huge amount of that money, as I was saying in the earlier story about Samita, one of our diaries, a lot of that money is going into housing. So that produces the kind of stimulus that Mario was talking about in our area. So people tend to build in a rather grand way when they get this overseas money. So it produces a lot of jobs for skilled people like masons and carpenters, a lot of unskilled people, like the people that carry the soil and carry the bricks around the building sites. So we're seeing a lot of that. In terms of specifically how people coped with COVID in our area, nothing particular to say on the housing front there. Many of the housing projects continued through the COVID crisis because people already had the money available and had already stocked up with the materials they needed for the building. So that allowed a few of the poorer people in our diary set to continue to get a little bit of wage income during the crisis. But the general story of how the Rishipara diarists coped with COVID is through caution, through belt tightening. What people did was, when we had this very, very sharp V-shaped downturn in April, when we had a nationwide lockdown, was people simply stopped buying anything other than essentials. So we look each day at how much money people are spending on food, clothing, education, so on. What we saw in April, that they didn't spend anything on anything else except the basics of food. And that's what carried them through. Plus one other thing, which I think is worth mentioning, is what emerged from looking carefully at this is that people had a lot more cash reserves held in the house than people might imagine. You might imagine that poor people would have very low levels of cash reserves and would soon run out of them in an emergency. Well, as it happened, the combination of of a habit of having cash reserves in the house, plus this belt tightening, this refusal to spend any money on anything except essentials, was what allowed almost all of our households in our diary set to come through without any really severe effects. Like very few people went hungry. Very few people had to skip meals and so on. So that's how it was done, by a very sort of sensible belt tightening kind of attitude.
So once again, I think we can say that, you know, the poorest members of society have to rely on themselves and their own ingenuity, and they're not waiting around for the government to come in. But Stuart, Marja, it's been a real pleasure speaking with you. Thank you very much for taking the time, and I wish you both very well.
Thank you very much, Patrick.
It was a pleasure.
Hi, Leilani. It's nice to see you again.
Hi, Daniel. Nice to see you too. It's been some time.
It has indeed. So last time we talked was 3 years ago when we had the award on housing, and you gave the keynote at the time. At the time you were the UN Special Rapporteur on the right to housing, and
That's right.
Since then I think you've moved on and you've started an NGO working in this area.
That's right. So my mandate as rapporteur finished at the end of April of this year, right at the beginning, really, of the pandemic. At the time, we didn't know how long the pandemic would last, but now we know it's lasting. So I ended at the end of April and immediately segued to a new entity that I've helped to create called The Shift, which is really an international. We're calling it a movement for now. We don't want to be just defined as an NGO because we have actually governments fully engaged, city governments in particular. But our aim is to secure the right to housing globally.
No, that's great, and that's exactly why we decided to reach out to you. I think you have a really important perspective to kind of understand why is housing important and who is it that's being left out. And as a sector in microfinance and financial inclusion more broadly, you might remember even back then, one of the emphasis points for us was there is not enough attention being paid to the importance of housing. And from our perspective, housing is one of the most expensive assets a family can ever have. It just costs a lot of money, regardless of of income, and it is one area where a well developed, focused product, where you're really working with poor families and thinking about their needs, you can make a real difference in helping people move from, oftentimes, substandard housing that really doesn't have what they need, and help them sort of move to stages where they would. Most people prefer to be, which is housing that allows their children to study, a housing that might enable them to have a business at the home if that's what they do, a housing that has water and lighting and also sort of the things that we take for granted. Those of us who are sort of lucky enough to be in countries that have that being widespread. So I just wanted to ask you, your thoughts about, if you are looking at engaged in a particular country, thinking particularly of countries in the South where income levels are, significantly lower than, let's say, in North America and Europe. What role do you think? What positive role do you think financial providers can play in enabling access to housing for sort of the low-income families?
Yeah, Daniel, thanks for the question and for the setup of the question, because if I recall, when I agreed to be the keynote at the European Microfinance Awards in 2017, I was like, why are they asking me? Like, I know nothing about microfinance. But then as I started to explore your materials and the projects that we were looking at in terms of microfinance and that were very housing specific in 2017 was the focus, I realized that we have a real common interest, and our common interest is helping the lowest income, most in need households. So we have I'm a human rights lawyer, but we have as our starting point the very same concern. And I've learned, I'm old enough to know that when you have a similar concern, you have a good ally and partner, even if you disagree on some points and, places. And so I do think this is a super interesting, just to say, this is a super interesting and important conversation, because not only is housing the most expensive assets that people will have in their lives, we now know, especially with the pandemic, that it is the centrality of housing and decent housing in one's health, life itself, one's safety, one's sense of well-being, one's sense of security. And so we really have to explore every avenue to figure out, how do we ensure access to adequate housing for all households in the global south, the global north, and regardless of income level. And so if microfinance is one point of leverage to ensure this, then we need to look at it, So, so just to say that, even though I'm a human rights person and I generally have a interesting, shall we say, relationship with finance, we don't want to, excuse the expression, throw the baby out with the bathwater. I mean, just simply because microfinance engages financial actors doesn't mean that there isn't some value here that needs to be explored and supported, in fact. So that's my starting point. If people are scratching their heads, what's Leilani Farha doing talking about microfinance? That's my starting point, because it's so very important right now that we harness every tool and every option that's available to try to ensure adequate housing for everyone across the planet. So that's where I'll start, Daniel. Do you want me to weigh in on some of my thoughts around microfinance or some of my concerns?
Absolutely. I would love to hear what you think. Absolutely.
Sure. So I guess where I start getting, where we have total commonality, which I love about the concept of microfinance at this scale, like where it's families in need who either don't have housing or have grossly inadequate housing. What I love about the microfinance approach is it understands that individuals, families, households really can contribute to their own housing and should have a say in what their housing looks like and how it develops and the incrementalism of housing. So, for example, I remember when I was reviewing the microfinance projects that were potentially going to receive awards. In fact, the winner was a Mexican indigenous community, and they were really interested in upgrading their own housing and being able to maintain their housing on their own lands. And it wasn't that they wanted to go from basic housing to luxury housing and palaces. They had a sense of their own needs, which were modest and incremental. Like, first we have to build better walls, let's say, or build better roofs, or make sure that everyone has a basic structure. And then from there, there's a sense that you can improve your housing. And so I really love the microfinance model, where you're really entrusting in the people, their sense of their needs and how they can meet their needs through a small loan. That is very consistent with the human rights approach, where we put people first, basically. And we recognize that people have expertise. I mean, we're experts in our own lives. People know what they need, and that people generally have modest demands or needs. I rarely meet low-income, poor people who are asking for palaces and mansions. They're asking generally for running water, electricity, a decent roof, right?
Right.
So that's what one of the things I love about the potential or capacity for microfinance. Where I think we have to start being very careful is around things like who is eligible for the microfinance loan and on what conditions.
Right.
Are those conditions consistent with human rights? So, for example, you wouldn't want to bar single-led households where the head of household is a woman. Right?
Absolutely.
You wouldn't want to deny that. And so you'd want to make sure your microfinance financing is extended to in a way that is non-discriminatory. We could just say that. And that would be really important. But you wouldn't want other structural barriers that are common with financing to play a role. So, for example, I remember, in fact, with the winner in 2017, there was a potential barrier in accessing the loans because they were originally supposed to show title to the land.
Right.
Now, of course, Indigenous peoples often don't have, papers documenting. And so the lender ended up adapting. It was actually a lender in conjunction with the state, the government.
Yes, exactly.
And I'm amazed at my recall. I'm not looking at notes, and I haven't reread this. So this is
really in the specific case. I mean, you're absolutely right. So the specific case is this is in Mexico.
Yeah.
The lender was Tose Pantamin, a cooperative.
Right.
And the Mexican government had a subsidy, but in order to access a subsidy, you need to show a couple of things. One is title, and the other thing you also needed to show that you had some equity. You need to put up some deposits. And so what they did is they did something very innovative. They said, well, look, the members of this tribe don't have much money. They can't really put down the deposit that was needed, but they each work on each other's homes. So like when one family is building a home, everybody else is helping them build that home.
Right.
And so what they agreed is they got the government to agree to count their labor as equity. It's a very innovative idea.
Yes.
But you're exactly right.
Exactly. And so it was that flexibility of the loan that was so important. And that flexibility would be consistent with human rights. But what we have to be careful about is that there not be impediments to accessing a loan that would be contrary to human rights, basically.
Absolutely.
And one question I don't think we discussed back in 2017, but I'll ask you now is, one thing that would worry me is if for whatever reason someone couldn't pay back the loan, who then ends up owning the property, and what happens in those circumstances or scenarios. And though the award winner, I think it wouldn't have been an issue because it was a cooperative and it was the state, and there was probably ways to manage that. What worries me is some of the models that I recall reading at that time were quasi-bank, like they were the micro-lender, the microfinancer was so big, in fact, in one scenario, in one situation, that they were tantamount to a bank.
Oh, they were a bank.
They were a bank. That's right. There we go. Thank you. Who was it?
Mi Banco in Peru.
Mi Banco, that's right.
Yes.
And I remember feeling a little bit concerned there because would it mean then that the bank owned the home and could foreclose on the family? And then we're just replicating models that don't work for low-income people often. And so that's something I think we would want to be careful about. I don't know if you have thoughts on that, Daniel.
Oh, that's a very good question. And it's and you're absolutely right. It's at the very crux of where you kind of transition from what is still a financial product and a financial services model to your world, which is a human rights model, right? And where is that line? Where do you set that line? Is absolutely crucial. And I have my own kind of personal thoughts on it. I mean, you can certainly imagine cases where let's kind of posit an example. Let's say you have a borrower who says, listen, I got this loan, I have my house and I don't have to pay you anymore, right? And that happens, right? That's a real thing. So then there's an obligation to on the part of the lender to say, hey, look, you can pay, you're choosing not to, but you can. But at the very same time, you may have a situation where somebody suffers, maybe it could be an external force. Somebody in the family got really sick and can no longer work. That happens all the time. Or some other tragedy that befalls, especially poor families, much too often. And the way I kind of think about it is, so these loans, it kind of depends. When you have about housing microfinance, typically there's no mechanism for the lender to foreclose. That doesn't exist as a legal outcome. If you have a type of loan that's kind of adjacent to housing microfinance, which I often called micro mortgage, which is a very small mortgages aimed at families that are, your average rickshaw driver, auto rickshaw driver, or somebody who works in the railroads in India, that kind of profile. So a working family, but definitely low income. There, it's a real mortgage, and the legal opportunity for the lender to foreclose is there.
Right.
But I think a socially oriented lender has the obligation to, first of all, ascertain, is the person not paying for a reason that has to do with them just not being willing to pay, or has something else happened? And second, put in place as many protections as they can to, for example, make sure that there's life insurance in place for the duration of the loan. So if a person does get injured in a way that's impossible for them to work and earn an income, the insurance protects them.
Right.
Same thing on the property insurance, right? If there's a fire, and we do this, in sort of wealthy countries usually. And I think there's also a third part, which is really important, which is to say, okay, maybe you suffered a temporary difficulty, and it's to recognize, look, I'm not going to kick you out of your house so long as we can work out something, and I'll extend the loan and I'll restructure to allow you to do everything possible to stay in the home that you have. And I think the goal is never for a lender to throw people out. That is not
Right.
that is not the goal. And even then, recognizing that as a lender, you still have to have that ability if you're going to be able to enforce the contract. Because if you don't, the borrowers will know that you can't, and you're going to have a non-viable structure after that.
Right.
So you always kind of have to play around this line, and
Yeah.
it's a hard line in every sense.
I think all of that's understandable. And I think what I would suggest, and I think in 2017, I suggested this in my keynote, which is that we, as I said, it's super important that we avail ourselves of the tools that are out there to try to solve this global housing crisis. And I do think there's a lot in microfinance that could be so beneficial. And as we're talking, we are coming up with a kind of reasonableness standard, right? It's well, let's figure out what would be reasonable. And what I would suggest, as governments go down this road or look into this as to invite in microlenders, or as microlenders become interested in this area and start really engaging communities, is just to ensure that it is always framed within the human rights standards. So when we talk about, I'm happy to learn that foreclosure isn't part of the microfinance lending when it's on the when it's not a proper mortgage.
Right.
And that's super important because under international human rights law, of course, there's an obligation that no one be evicted into homelessness. And in many of these cases, this is the person's or household's only home. And without this, they would be rendered homeless. So you'd want to build in those protections and make sure that that never happened, for example. So there's a way in which we, in fact, maybe Daniel, you and I should do let's another project. It's just what I need. We're all so busy. But maybe we should come up with human rights principles for microfinance lending in the area of housing. It could be kind of cool. Just, five key principles. That's all it would have to be, I think. That could be cool.
It would be very interesting. Yes,
on a postcard.
I mean, the idea of rights in a financial obligation is crucial, right? You have to outline, okay, what are my rights that will not be violated?
That's right.
Like and then from there on you go. But I think that there's this notion of laying a foundation. Absolutely.
Yeah, and I like the idea of, I've been toying with this a little bit, but trying to get those engaged in business to understand that human rights are just like part of doing business, that it's just part of business practice.
Right.
Just like you wouldn't underpay employees, you shouldn't underpay employees, you shouldn't make someone work 80 hours a week. Similarly, you can ensure that there are human rights built into your business model and your business planning.
Well, Leilani, we're running out of time, but I really enjoyed this conversation. I really like your idea of thinking ahead to the principles of human rights in finance and housing finance specifically. I look forward to us staying in touch.
I hope so.
And thank you very much for chatting with us.
Thanks so much, Daniel. It's really nice to re-engage with you.
We're back.
We are back. All right, and we're live.
Great, and we're live. So thanks for that, Daniel. I hadn't seen that interview before. That was really interesting.
And I really enjoyed your interview with Marja and Stuart. I think they shed a lot of light on why housing is important. Absolutely.
Yeah, they really did. So we don't have much time, but we did have a question that we want to get to, which is related to the issue of longer maturities and mortgages. And the question is, where do we see that happening? We do address that in the book quite a bit. There's a few places where India particularly is mentioned, and there's a whole special section on how India managed to make the longer term finance as well as short term finance available. And there's also another session on Friday that you can join at European Microfinance Week.
It's Friday morning. And it's really for those of you who are interested in looking at a case study of a country that's really succeeded in exploring the micro mortgage sector, which is what Britt asked in this question. India is a fantastic case study, and the speakers are as good as they get. Right, we have the former head of National Housing Bank in India, and we have a very active equity investor that's been basically at the very beginning of that sector's. Well, if you go back 10 years, that's when the micro mortgage lenders really started, and they were one of the very first ones to be active. So, I do strongly encourage you to take a look at the agenda and check it out. Yep.
Yeah. And just in terms of other countries that are doing interesting work around extending the term to maturity for products like housing, Mexico has done a great job of trying to engage both mortgage finance for purchase as well as for home improvements, and even incorporating technical assistance, which is another area that's fascinating, which you tend to find more in possibly housing microfinance than mortgage finance. And then one to watch, which I think is interesting, which we don't address in the book because it wasn't really happening at the time we did that. We wrote the book, is that West Africa, there's 6 countries in the West African Monetary Union, they have a mortgage refinance facility called CRRH, and they're really making a big effort to allow refinance for the types of microfinance institutions that serve lower income people, specifically for the purpose of housing. So that's a good one to watch. I think one thing, Daniel, that we tried to, or that we learned maybe when we were writing the book, is that for housing, you have to look across the entire spectrum. That you can't talk about finance for just one piece of it. You have to have, for example, finance available to access land. I mean, that's really the basis of all housing, is the land. And if you don't have the finance to access the land, then you're not going to get the houses built. Right through to building, right through to retail, so that the buyers can borrow money to purchase the houses. And you have to look at it across the entire spectrum.
And I would say, it even goes beyond finance itself. So even though, we're in the financial sector, the book is focused on housing finance, but you have to have awareness of all of the other aspects that affect housing finance in the way, regular microfinance isn't. You can have microfinance in just about any environment. In housing finance, you need to be aware of what are the legal codes for land ownership, what are the legal titles that are available, and what kind of families can have those titles and what kind of families can't. You also have to look at building codes and sort of what kind of building structures are allowed. there's a lot that goes into having an ecosystem that's really geared to enabling low-income families to have the high quality, good quality houses. But on the other hand, even though the market is complex, it yields a great deal of benefits to the families, and that's really why we wrote the book, right? I mean, it's trying to take this really complex ecosystem that has a lot of actors. It's from the way that low-income families manage their cash flows in order to invest in something really big like a house, to the way providers can interact with those families, to the way that investors can interact with the providers, to the way that the regulatory and policy environment affects all of these layers. So the book is meant to take all of this and kind of distill it to, okay, here's what you really need to know. And if for those of you who are watching who are interested in learning more, we have 3 other sessions that are sort of delving into each of these aspects, and do check them out as well.
Yep.
So I think we don't really have any more questions, and we are a little past our time already. So this is a good time to bring it to a close. Thanks to everybody who's watching. We, both Patrick and I, will be, in the conference. If you want to send us a message or you have a question, and beyond us, to all of the other authors in the book. There are, I believe, 13, Patrick, total? Well, including us. I think it is 13. Yeah, it's a lot of people, and it's really the best in the business. We've been lucky to be able to work with so many experts in housing finance. So, just feel free to drop us a note. We'll be around, and if there's anything to take away from this whole conversation, to what Marja pointed out, to what Stuart pointed out, to what Leilani pointed out in this session, is that housing has a huge impact on people's lives. And I think it's something that kind of gets missed in our sector anyway.
Yeah. Great. Thanks, everybody.
Thanks. Bye-bye.
The last time there was a book on housing finance, it was 2004.
Housing deserves more attention from governments and from international organizations.
We are presenting some highlights of research that we conducted during the last 5 years on the impact of housing microfinance in the lives of low-income families.
I think this book is going to be very, very relevant to the policymakers, to the regulators, to all stakeholders who have anything to do with housing finance for the poor.